Hello and welcome to your favorite Smart Money podcast called Bodies and Wicks. I tried recording one of these just a second ago and it literally just had 6 minutes of basically nothing. So I'm trying to do this again. I test recorded another segment and it works. So I'm hoping this one works. So bear with me. Smart money is all about those who have the ability to control the market. Um, the market is always manipulated, is part of the theory. Meaning those who have the deepest pockets will basically contribute to the controlling of the market. So anything that has believed in the retail world, such as, hey, there's a double bottom, let's trade along that double bottom because there's a safe support, would be something that we do not believe because that double bottom tells those who have the biggest pockets, hey, the retail traders are going to trade here. We should actually sell most of our assets. That way it'll drive the price down and then hedge against it and short it. And that way we'll make money on the way down and then buy it up at a cheaper price. That's an example of how smart money works. So, um, this particular video is going to be regarding Ethereum, as my last one was about Bitcoin. And so we'll get into that. First, I would say check the links in the description. I have been reached out to Mexi Global to be an affiliate, as well as Ledger, the hard. Uh, I can't even think of the name of it. The hard wallet for your crypto. They just now came out with an online Web3 converter, which is awesome. So you can trade while you're online or offline, and also keep your crypto safe within your Ledger wallet. So, also, if there's somebody that needs to break out of their shell, needs to hear these type of things, and needs to understand that the market is always being manipulated, what I would suggest you do, help them by asking them to subscribe to this channel, like the video, watch the video, share it, whatever you can do. All right, so first let's hop into this chart. All right, so this is the hello. I can't even bring it up here. There we go. This is the Ethereum chart here. All right, now a couple things I wanted to point out to you on this is the indicators I have. I usually don't use indicators. I use boxes because price basically does two things. It attacks liquidity and it moves towards imbalances. The two are not mutually exclusive, and I'll get to that in just a second because it's possibly doing that very shortly. So this first indicator I have down here, I'm going to make it a little bit wider. That is called the COT. Other people have made versions of this. Tradingview just came out with a Roan, which I was excited about to see. It's called commitment traders, right? And what this gives you is this gives you the people that are in the futures market, their positions on what they believe the price is going to do. So as you can see, the commercial hedgers don't really have a whole lot of positions in crypto markets. But if you go to other markets, such as the lumber market or the gold market or some type of market like that, you will find that the commercial hedgers, the green is all over the place, right? But the large hedgers, the large traders, they love to play in the and speculate in the crypto market. Now, as you can see, their net positions have went short this past week, and that was right as soon, well, as it was shorting, yes, but as soon as you would think it would be shorting, you would think it would also be going back up, which it did. So it came down, and it came down to a level, right, to where most people would believe would be a support level, right? This would be kind of a support level, correct? Why would you be shorting at a support level? Well, this supports my smart money theory. It is because it is not technically a support level, right? Because price likes to move toward imbalances and liquidity. As you can see, since there is kind of equal lows, that is basically manufactured liquidity, meaning that this is where everybody would have all of their buy stops, or sorry, buy limits and sell stops in place. One to catch a sell stop, if you have that in place, to catch a breakout going south, or a buy limit in case it gets down low enough, it breaks through, and your buy limit is then executed as a market trade, and your liquidity is released into the market, and you're hoping it goes up. Those are the two things that retail traders typically do around these types of areas. However, if you know the market, you know the smart money market. Hello, my microphone was not on for that entire time. So what does this show? So what I wanted to show in this one was the Williams VIX fix. Well, a 4. It probably got cut off about um, the market, knowing something about the smart money market and what it's going to be doing, and that would be it possibly dropping, is what I was trying to say, because of the large traders and the commitment of traders. As you can see, they're shorting, and as well as there is liquidity underneath, meaning that it looks like a safe spot to buy, but more than likely it is not. And the next, I want to go to the Williams VIX fix. Okay, Williams VIX fix is made by Larry Williams, who's the only person to win the Robbins Cup with by taking $10,000 and turning it into $1,000,000. And he wrote a book about it, how he made $1,000,000 trading commodities. He's written many books on trading. My mentor was Inner Circle Trader. His mentor was Larry Williams, so he's kind of like my grand mentor. So when it comes to uh, you know, I guess trading, I guess you could say this is my grand mentor. And what I was showing before was that you can kind of change the look back on the standard deviation. There's a couple different things you can change, of course. Um, this one is defaulted at 22. So if you defaulted at 22, you can see that right now it's showing that this area is kind of a bottom, but it's pulling up very quickly, even though it's going down. So to me, that's kind of a troubling signal that it could be all of a sudden dropping very quickly, and we see another one of these uh, green candles. They're green areas as to where we could find the bottom of the market, considering that's where a lot of the large traders are also heading towards, right? So these are the kind of things, and also the reason I have these kind of boxed in is has to do with the market maker buy sell model. If you don't know what that is, I'll switch it over to here. All right, I'm gonna try to pick up where I left off. Hopefully, I am able to do so. All right, so we got to look at Larry Williams and who he was, um, and that's why I come over here and I say you know, trust any kind of most Larry Williams uh, indicators because he's been in this game for a long time. He was my mentor's mentor, so uh, he's like my grand mentor, I guess you could say. So um, and basically what this indicator does is it finds market bottoms, right? So he's saying that through you know there was a bottom here. Of course, there was a bottom here when it got this low, and then it drops again. Now it's finding a bottom again. Now it's look, as you can see on the daily, it's moving up ever so slowly, which kind of makes me wonder with everybody shorting it, are we going to see another boom drop to the bottom? So those are two things that I am looking at to see if we are going to catch that kind of drop in Ethereum. Um, and as far as smart money goes, these are the type of things that you need to be looking at. You don't need to be looking at if it's making a crab formation in a harmonic or if it's following a trend line. Like as I pointed out here, I made this trend line, making it a phantom, what I call a phantom trend line, saying that look, it's touched here, it's touched here, it's touched here, it's touched here. And guess what's gonna happen? It's gonna get broken. And when it got broken, boom, it got broken hard, and a daily fair value got formed, a 4-hour fair value got formed, and then this box is just to illustrate kind of the market maker buy sell model. I would suggest you look that up. Um, Basically, what it is that price starts off in one place and it ends up in another. Say this would be your actual selling point. And why would it be your selling point? Well, because it goes up and it ends up below where it actually sold to. So if I actually went back and, well, here I can show it to you real quick. If I go back to this other, um, if I go back to this other place I was looking at, there we go. So as you can see, it started here, and at the one green, it ends up at the other green. So that's kind of what I'm thinking could possibly happen here.